So a lot of people are asking, is this a bounce back rally? I don't think this is a bounce back rally. It's bounced back quite well. It has also broken the channel also. So I don't think this is a dead cat bounce. I think we are clearly out of the dead cat bounce perspective. And if you see today, the FIIs have bought almost 7,500 crores worth of buying has happened right now. And I don't know how many of you all are here from the community, but if you're here, I don't know if you are there, you can vouch for this. But over here, there was a lot of noise in the market. There was a lot of people talking about India will be like China, 20 years no returns, Japan, 10 years no returns, etc. And I kept saying nothing like that is going to happen, boss. We are going to go back up. There is no way we are going to stay in this zone for 10, 20 years. We might not go back up instantly. We might not go back up in one shot. And that is something that I still believe that we will not go up like this, right? I feel we will do a slower recovery. Now, obviously, we have done a massive recovery here. It will come back to retest a little bit. It should come back like this, not to 22,700, but at least to 22,000, 23,000, and then I think we will go slowly up like this, right? I don't think it will go up in one shot. So it is a slow burn that is happening, and we were quite oversold from that perspective. So I think we will do a slow recovery, and that will definitely happen. So FIS have bought almost 7,500 crores today, so they are so back, right? And we've seen this because your dollar INR is fine now. Your lack of extra income is going to come into the market. Number two, and if you look at the US is not doing great. Number three, so all of these small things are happening in the market, and India is looking very attractive again. And I think recently a Morgan Stanley report also came out, another beautiful report. But Morgan Stanley report also came out, which basically spoke about India being one of the fastest growing economies as well. So if you add all of this, India is going to be all right. But all that is fine. Let us do this a little old school. How many of you are ready for the PDF report? I know a lot of people said that, Shashank, can you come live? Can you sit for a long time? Let's go through the report together. How many of you all are ready now to go through this beautiful report? Yes, Stars PF also has done a beautiful rally. That is also going up. Let me just check if I can just show you quickly that also. But I mean, it was always known that it will do well. Let me just check. The non-averaged version has come up to 23%, whereas index is maybe around not 16, but little better than 16. Right? Let me just check what is the small cap number right now. 16,184. 16,184. So you can see that this one is around 9% difference, and the averaged one, where I averaged heavy, there is only around 5% difference from the small cap index. So I'm very confident that this will get recovered in the next 3 months or 5 months. My estimate was September when I will start hitting profitability. So I think I'm continuing to go with this September idea that in September, I think this portfolio will become profitable, and then October, November, December, most likely we will beat the index, is my hope. Let's see, anything can happen in the market. Okay, awesome. So let's quickly jump into this beautiful presentation. Now, these are some basic reports that I keep reading. I do a lot of reading every single week on sector reports, and I also do a lot of stock reports. So I thought let's break down one beautiful report that I saw. By the way, this is not sponsored. This is not, I don't have any partnership or anything with White Oak. It's just a nice report that I wanted to go through it. Okay. So all of you guys can see the report. All of you can see it. Yes. Very beautiful. It just has a lot of good information. So I thought it's a macro report. Okay. It's not a micro report. It's a macro report, but we will dots with a lot of things. Okay. Let's go. So basically, this report is called Market Perspective. This came out in March itself, 2025, and it basically talks a little bit about the history and geography of our Sensex economy, right? Because a lot of people kept saying that, Shashank, market will not go up 10 years, China 20 years, all nonsense, all noise. I call it noise, right? If you just put your head down, use your brain that God has given you, and you cut down the noise, I think you will be much better as an investor. So if you look at this report, you would see that this is how Sensex levels have gone from 2020 to 2025. This is post your COVID last 5 years trend that has happened from 2020 to 2025. You will see that the Sensex EPS, what is EPS? Earnings per share. That means have companies in India actually grown, right? Simple logic. But last 5 years, definitely you would tell that, Shashank, the data of last 5 years is little biased. I strongly believe that last 5 years data is biased only because of COVID and extra liquidity boost we had after COVID. So every company did, right. But if you see, the EPS growth of Sensex went up by 17%. The Sensex itself went up by around 13.8%. And the Sensex TRI also went up by around 15.2%. The absolute growth was above 100%. So in the last 5 years, your money has basically doubled, right? But what is important to see is that the Sensex EPS went up by 17%. Okay. Now, this is one of the best slides that I think all of you guys really need to understand, because this negates your theory of Shashank, will we be like China? Will we be like Japan? This exact slide will stop all your doubts on that, right? So, do all of you know what nominal GDP is? We all know what GDP is. Do you know what nominal GDP is? Anybody? Okay. So, nominal GDP is nothing but your GDP of the country plus inflation of the country. Okay. So, let me give you an example. Uh, if the nominal GDP of if the GDP of the country is 5-6%, what is India growing today at 6%, right? So if the GDP of India today is at 6%, and inflation is, let's say, 5%, the nominal GDP, if you add, comes up to 11%. Now, why do people look at nominal GDP? It's because when inflation goes up and when you're invested in the market, now let's say an ITC, do you think he is going to sell the same product to you at the same rate for the next 5 years, or do you think he's going to keep adjusting that product with inflation? Right? Every year, he will increase the shampoo cost by 1 rupee, 2 rupees, 3 rupees, 4 rupees. You won't even realize. Or he will do shrinkflation, right? Or he will reduce the size of the package. But either which way, one of the two will happen. So when you are invested, right, inflation works in your favor, because all the companies that you're invested in will pass on the inflation cost to the end customer. Like ACs will be more expensive than last year, or the year before that. It will always be more expensive. So when I'm invested, it is very good. Now, if the country is growing at, let's say, 10 to 12.5%, if the country GDP plus inflation is growing at 10 to 12.5%, then a good company, I'm not talking about some shit SME company or some micro cap company or a penny stock, a good company, if the GDP grows, nominal GDP grows by 12%, then can you safely say that a good company will grow about 12%? Is that logic correct? Just by pure logic. Right, the revenue growth, I'm not talking about the stock price. I couldn't care less about the stock price. I'm only talking about the company. So if a company is growing, will the company's sales and the company's profit grow by above the nominal GDP? So that is why nominal GDP growth is so important. So if you look at the last so many years, now this is why this data is so beautiful. If you look at the data from 1993 to 2024, since 1993 to 2024, we've had multiple ups and downs, right? We had the 2000 Y2K boom, we had the 2000 crash, the year of 2000, then we had 2008 and then fall again. Then we had 2020, fall again. Now we are currently in the next bull run, right? So if you look at the Sensex return in this period from 1993 to 2000, whatever here now, you will see that the Sensex return is around 11.9% plus dividend yield separate, right? So 11.9% growth is happening only in Sensex. The nominal GDP has also gone up by around 12.5%. And if you look at the Sensex EPS growth, which is the growth in the nation, growth in the earnings of each company, that has also gone up by 12.5%. Have you understood this? So is this so now when you think about India, when you're invested in India and you think about India, now should you have doubts about the growth rate of India? Yes, we can go down for some years. I'm not saying we will not ever have a correction or a consolidation. We've had it in the past. Like after 2008, we had a consolidation for 2 years. But can somebody now come and tell me that for 10 years, Shashank, India will not grow? Is that possible? Right? With the population we have, the younger population and all of that, it is not possible. So we will always keep growing. Right? Very interesting number. Now look at another beautiful slide. Look at this. This is so good. Now, why a lot of people were saying that this is the best time to invest in India? Just look at this slide. And as I said, this is a beautiful report, and we will just learn as much as we can. Now, this is the 10-year average PE ratio, or price to earnings ratio, which we all look at whether it's expensive, not expensive. So, this is the 10-year average PE ratio of Nifty, right? The 10-year average PE of Nifty was 18x. Okay, 18 times is the PE ratio. And sometimes we've been below this curve, sometimes we've been above this curve. And recently, when the market fell in the month of September, October, December, October, November, December, Jan, Feb, when we saw the market falling so much, we saw that Nifty had gone down to 18 PE today. You remember this? At the lowest point, Nifty was sitting at an 18 PE downturn. And that is why I said it was one of the best times to buy, because if I am looking at Nifty at 18p, then definitely other people are also going to find value at Nifty at 18p, right? Who are the other people? I'm talking about your DIIs, I'm talking about your FIIs. And that is why we see suddenly the FIIs who are selling constantly have now started buying India back, because the value started getting created in India again. Now, if India is growing at 18%, India is growing at 11, 10, 11% GDP, nominal GDP, and P ratio sitting at 18, that becomes a beautiful catalyst for growth. Now, look at this period. Now, we had multiple, this period also, this chart also shows us the past, right? If you look at from 2005 to 2008, India's GDP growth was approximately 8%. And in that point of time, the Nifty earnings CAGR was 25%. Right? GFCF is something which is also important, but you don't need it's called gross fixed capital formation, which basically means what is the asset growth of India. Like usually when you increase your assets, the revenue also starts going up a lot, right? So if you look at this, you will see that in the period of 2005 to 2008, Nifty went up by 25%, average inflation was 5%, and the INR USD we went up by 3%. INR went up by 3%. That's crazy because rupee became stronger compared to the dollar, right? Now we see the same thing happening in 2009 to 13. This was the time when the market crashed. Even after 2008, when you look at when the market crashed, Nifty gave an earnings CAGR of 9%. From 2009, from here, right, from 2009 Jan to 2013 till here, Nifty gave a CAGR of 9% even after and this is when INR also depreciated by 6%, inflation had gone up to nearly 10%, but we still got a return of 9%. Then we had a slow growth period over here. From 14 to 17, 3 years, we only had 3% returns. Then we had minus 4% from 18 to 20. This was also because of COVID drop, so it shows minus 4%. So technically, it's not a problem. And then from 2021, 2022, 19 and 11. But you see in these multiple periods of growth rates, you see how INR USD, we have always depreciated by 5%, 4%, 1%, 4%. The USD has always gone up. Our inflation has always been around 4 to 6%, right? Our GDP growth on top, if you see, has always been around 6 to 8%. And whatever happens, India has kept growing. Yes, there have been periods of overvaluation, there have been periods of undervaluation. So now you should understand, if I look at the 10-year P backward, and I should understand that the minute we are somewhere around here, please be careful. The minute you go to 25, 30p or even 27p, you as an investor should be careful. You should be sitting in more cash and not going la la on the market, right? Because at that point is when the frenzy becomes the maximum. And at that point, you lose your mind and you start investing like a, right? Now, not just P ratio, if you'll also look at the price to book ratio, another beautiful metric. If you don't look at this, the P ratio, let's look at the price to book ratio. If you look at the price to book ratio of the last, again, 10 years from 2010 to 2025, 15 years, if you look at the ratio, this is how the 10-year rolling average of price to book ratio is there, right? So if you look at this, when the market had fallen in Feb, we were at a significant lower turn, significant undervaluation to the mean. I don't know how many of you all know this, but there is a concept called mean reversion. Okay, this is something that became very famous in the 1980s and 1990s. Most hedge funds only this strategy called mean reversion strategy. Renaissance Industries, which is the biggest compounder in the world, technologies, they actually built a lot on this mean reversion strategies. And this is something that is proved even today. Whenever something goes too up, it has to come down to the mean. Whenever something goes too down, it has to always revert back to the mean. So it's called mean reversion, right? So when the market fell below the mean, right, and every time it has fallen below the mean over here, it has become a buying opportunity. And whenever it gone too far away from the mean, it has become a selling opportunity. And this will hold true if you take any chart and you do it for the last 15 years, you will find the same answer, right? Any mean standard, have something called standard deviation. So if you're standard deviation one, standard deviation two, if you're around standard deviation two, it will come back to the mean. If you are around standard deviation one, two on the bottom side, it will come back to the mean, right? I even have an indicator on TradingView for this, which makes it easy for me to look at. It's called MRC Smoother. Even on that indicator, it showed the exact same thing, right? So there was a mean reversion happening there. I don't know if I can show it here, but let me just leave it for now. Cool. So this is what I said. So on all fronts, it was looking like India was going to do a comeback. And there was no negative news. Whenever there is a bear market, there has to be a significant macro negative news or a big negative news of India. That wasn't there. We were not seeing the inflation was at an all-time low. Rupee liquidation, rupee injection was coming in at the same time. Tax rates were completely changed. GST rates are about to reduce. Right. The only thing that was happening was FIIs was selling, but India as a concept was not making any problem. Right now, look at this. I'll show you the indicator in the end. Just remind me. Now look at the next slide. Now, what is this? This is how many times the FIIs have sold their money in the past, and what is the ratio of the FIIs with respect to the market cap of India, right? So, how many have the FIIs sold? Even in the past, they've sold. It's not only the first time they're selling, but how much did they sell in the past with respect to the total market cap of India? Now, you do you understand why I said this is one of the best reports I've read? Now, can you see how we're looking at history in the past? So beautiful, right? So in 2008, when we had the global financial crisis, $15 billion was out. As a percentage of market cap, it was 1.5% of the market cap. So that is why the market fell by 66%. The index fell by 66%. How much did we fall right now? 20%. The index fell by 66% in 2008. After that, we had the US credit rating downgrade in 2011. They sold a small amount, 0.2%, so we fell by 13%. Then we had taper tantrum, we had yuan devaluation, Fed hikes, demonetization happening. And you can see they've sold small amounts, nothing great, right? In fact, 2022, during Russia-Ukraine war, they sold more than what they sold right now with the current fall. They sold 1.1% and we had gone down 16%. But do you see that now, even though they sold 0.6%, we had fallen down by almost 18%. But that is now slowly changing because if you look at the DII and FII data, right, and you see something very clear. This is historical FII versus DIY flows. You will see something very interesting. Let's look at FII flows because a lot of people are only worried about FIIs, right? Whether they'll come back, whether they'll not come back. They move the market a lot. Every time the FII has sold, every year or every period the FII has sold, the next year has always been a boom in the FII money. Notice this very clearly. Why do I say this? Because if you are in the market today and FII has recently sold, that means there's a very high chance that we will start seeing a rally very soon with new FII inflow coming in. 2008 they sold, 2009 and 2010 they bought more than what they sold. They sold in 2018, they bought three times more than what they sold in 2019. Right? They sold in 2022, they again bought more. They sold now in 2025. Now you will see, if not 2025, definitely in 2026 you will see that the FIM money starts rotating back. This is just simple rotation of money. They book profits, when the market falls down, they invest again, the market goes up. And you will see the same thing happening in inverse in the DII ratio. Whenever there is a fall in FII, you will see the same 2008, there is a rise in DII. Right? 2024, there was a fall in FII, there is a rise in DII. So this is how it usually happens. Why? Because FIIs always had more stake in the market compared to DIIs. Correct? FIIs had more money in the market than DIIs because it's global money, dollars coming in, great for India and all of that. But now, if you look at it, it has slowly started shifting, and I'll show you that as well. So this is a very simple FII flow in various countries, how the FIIs have been flowing in various countries. And if you look at FY25, you will see this is India. So India, we lost a lot of FII money. Where did the money go? A lot of people know that it went to US and it also went to China, right? Here it's not there, but it did not go a lot to Brazil. It did not go to Indonesia, even though Indonesian markets are doing well. It didn't go to Malaysia, Philippines, South Korea. In fact, Taiwan and South Korea, there was huge money that was being pulled out of it. Japan money has gone into because even Warren Buffett is very bullish on Japan right now. He's investing in five companies in Japan. Japan and China have definitely taken a good amount of share from the Indian audience. But one, what happens is when they sell from India, India goes to undervalued position. When they invest in China, China goes to an overvalued position. Now they will book profits in China and they have to come back to India, right? It's a very sad cycle, but that is why FIIs usually end up making more money than all the retail investors because we have the logic of buy and hold forever. They invest in an undervalued economy, pump it up, make it overvalued, sell it, go to another place, pump it up, overvalued, sell it, go back to the old place. That is why global hedge funds, companies like Citadel and Bridgewater, they all make insane amount of wealth because they're not emotional, they don't care about any country, just moving their money from one country to, and that is basically the rotation that happens, right? Even now, you will see the rotation of money will come back to India. right? Now look at this. In this fall, during this fall, obviously now we have recovered a bit, but if you look at the fall, what fell the most, right? And you will see this very clearly, right? If you see what fell the most, all the industries that were hyped up fell the most first. For example, India defense fell down the most. Now, defense, you might say, is a very defensible sector. But why did it fall down so much? Because all the defense P ratios was supremely overvalued. Even today, I would say it is quite high, right? Utilities fell down, energy fell down. And what was the defensible sectors? Now, why is it good to look at the defensible sectors? Because tomorrow, if the market is going to fall, which it will fall, it is not, it is inevitable. It will again come down 20%. You will see the same pain again, maybe 5 times in your career, right? If you want to safeguard your position, then the banking sector and financial service sector is always the best hedge. Okay, best hedge is the financial sector. And also, when the market has to recover, the financial sector is what recovers India first, right? Because if I have to grow India, I have to grow it via loans, and the loans always come through the private sector banks or the NBFCs that are there, right? So IT sector is the second most defensible. Then we have your FMCGs, then we have hospitals, pharma, all of that coming in, right? Healthcare is always number two, and IT is number three. So it's always in these three areas: IT, healthcare, financials are very defensible in India. Anything else, your real estate, your energy, your PSU companies, your India defense, capital markets, even I'm invested heavily in capital markets, right? All of these will take always the maximum beating. Why? Because it was also very overvalued in the last 2 years. That is significantly how it is. But if you look at companies like Bajaj Finance, HDFC Bank, ITC, hospitals, they never fell. This whole correction, they did not fall at all. So that is why this is mainly for you guys to understand in the future. I'm trying to make you slightly more smarter and how to actually read these reports so that in the future you know exactly how to navigate your entire portfolio. Okay, next. By the way, guys, a quick small 2 minute pause, 1 30-second pause. Is this helping you guys? Is this report actually helping you understand and learn a little bit more about India? We are looking at a lot of historical data. So I just want to understand from your perspective, is this what I'm doing today helping you? As you know, this is not a normal video that I do always. I usually talk about stocks or I talk about a business, but this is the first time I'm looking at a report. Just want to understand if this is helping you, because if this is, then I can find more interesting reports and do a quick live session for 20-30 minutes and go through it with you guys. Okay? Okay. What is this now? Cool. So this is nothing. This is just a sectoral market cap indices performance. This is pretty basic. So let's not go here. Right. Same with this. Pretty basic. Yeah. This is important. Just look at this slide. Oh, so there are periods in the market, okay, where a momentum investor will do well, where you have to focus on quality, where you have to become a value investor, quality investor, go back to being a momentum investor, go back to being quality investor, because you see that every time you look at the market, there is always ups and downs, right? So in the bull market, let's say from 2020 to 2024, if you were sitting and being a low risk investor, you would have not made money because the market was doing momentum. You cannot sit and do time pass. You have to also be a momentum investor. This is for people who are churning their portfolio a lot. If you're a long term investor, you literally don't care. Okay. So see how the market keeps turning, right? In 2008, we had low volatility because the whole market crashed. Then suddenly everyone became value investors. Right? Then slowly we moved from all of that. Suddenly the market went into momentum, became alpha, and then immediately after that went to quality. And then the whole cycle repeats. Again, we come back to low volatility. Again, we go back to the whole cycle, right? So right now we are currently in the low volatile moment, which is the best moment because after low volatile moment, we go into quality, we go into value, and then we again go back into momentum and euphoria. It is a beautiful cycle that always keeps coming, right? We have euphoria. From euphoria and overvaluation, we will come down to low wall, right? Because the market will fall down. Once we hit low wall, everyone will start re-looking at the stocks. Now we will go for quality stocks, we will go for value stocks. And then once we go into quality and value, suddenly we will think everything has quality, everything has value. Now we need to go into momentum. Again, euphoria hits. Again, momentum and alpha will come back to low wall. So usually this is the cycle that we are. We had a lot of volatility, but right now I think we're at low wall, which is a very good sign because now we are going to enter other phase of the market, which is good phase of the market for us, right? Now, looking at which sectors did well. This is another beautiful slide. Look at the number of sectors that are there, which are the sectors that actually did well. So in 2024, we saw pharma took the highest bet, pharma and real estate took the highest bet, and they did really, really well. And if you look at the other services, they also did well. 2025, what is going to do, in my opinion, In my opinion, I tell you, NBFC is lending. Mainly the Bajaj twins, I feel, will do the best going forward. Why? Because India is now at 1 lakh rupees is going to be unlocked. People are going to do a lot of discretionary spending. They're going to buy laptops, phones. Stupid spending is going to happen. Whenever stupid spending happens, it's going to be on EMI. So all the EMI companies will start doing really well. There is also a talk on metal rally might happen because when a huge capex happens for any country, the metal demand starts going happen. So I feel auto will recover. Auto will surely recover because if you have Tesla coming in, if you have 1 lakh additional income coming in, if you have EMIs coming in, autos will start recovering. And I also feel the real estate market will again start doing really well, right? Because if I have 1 lakh rupees extra, I can definitely afford to take a house and pay EMI of 50 to 75,000 rupees. Absolutely possible. In Bangalore, you can buy a house for 1 crore rupees, put 20% down payment. The EMI for 30-year period is around 75,000. That is exactly what I'm paying right now, right, for one of the houses. So all this is possible. So in the past, we had the pharma, we had real estate, we had telecom. I think telecom also, I don't know if you guys have noticed the telecom industry. I think it is doing absolutely wonderful. Have you noticed now that Jio and Airtel have stopped fighting? How many of you have noticed this? Their price hikes come in tandem. Like both of them do price hikes together. They have literally come into the market, removed Vodafone completely out of the picture, and now they said instead of me fighting, let's just make money. So now both of them do price hikes together. You have absolutely no option but to say yes to the price hikes, or you can go up to BSNL, or you can go down to Vodafone, right? But both of them have stopped fighting. Both of them have become supremely profitable right now, and now both of them have taken Starlink. So you should understand that Jio and Airtel, Jio versus Airtel is over. It is Jio and Airtel now taking nice money from all of us, right? So that is basically how it is happening right now, right? Okay, let's go to the next one. This is a beautiful slide. I don't know how many of you all know this, but India as a whole, like India to contribution to the world market cap, and I don't know, you might have been seeing this that India is going to become the third largest economy. We are going to be Germany by 2026-27. We will become the third biggest economy coming in. India is growing at a very rapid pace, and the best part is how many of you all have now realized that India, not just the large cap, but the mid cap and small cap companies have started growing quite drastically in India. That is the beauty. Okay, that is something that we have not seen in the past, and I'll show you that as well. Right? Look at this. This is FII versus DI ownership in the past. In the past, in 2015, FIIs had almost 22% of India. 22% of the entire India was held by FIIs. DIIs, which is DI is nothing but people like me and you. Retail just putting our money in mutual funds and mutual fund investing in the market. DIIs had an investment of 10% and 22% in 2015. Today, both of them are at 17.5%. This only goes to show that the global income has not reduced. Please understand, FI income has not reduced. India's income, disposable income, India's growth mechanism of people able to make money, invest in the markets has increased. And that is why you see we have come up to such a beautiful point where DIIs today can take good shocks from the market, right? Eventually, I feel in a bit of time, give it another 5 7 years, DII. Guys, can you guys hear me clearly? Is my voice breaking? Let me just pause if my voice is breaking. Yeah. You will see very soon that in the future, DIIs will overtake the FII ownership in India, and that will be one of the most beautiful times because DIIs don't sell like how FIIs sell. Understand? They do not rotate the money. So if DII income, which is domestic institutional investors, have more stake in India, then the market volatility and the market shock will not be the same. There will definitely be profit booking, but they will reinvest back into the economy very fast, right? So that is a beautiful beautiful thing. And if you look at India from a 5 years, 10 years, 20 years time frame and compare it to most of the markets, including US markets. Look at this. 20 year, let's take 20 year, India is at number one position at 10.4, only next to Taiwan at 10.3. 15 years, Taiwan wins. 10-year, Taiwan wins. 5-year, Taiwan wins. 3-year, Taiwan wins. 1 year, Taiwan wins. So technically, all of you guys who are looking at Chinese market and saying China market is the best, we should go by Hang Seng. Actually, Taiwan market has given much better compounding than the Chinese market. Right? Indonesia, not great. Philippines very fluctuating, Thailand fluctuating, Brazil fluctuating, all the other emerging markets are not great. If you look at your famous USA, they are also very okay in compounding. But India has been a much better compounder over a 15 to 20-year perspective. But Taiwan has been one of the best. So if you're really looking at outside markets, you should not look at US, you should not look at Hang Seng. You should actually look at how you can invest in Taiwan market. I don't know. Honestly, if you ask me, I really don't know. I'm not even looking at it because I like investing only in India, right? I love investing in India. I've just recently taken two positions in US, very safe long-term positions, but most of my investments, 99% of my investments are in India today, right? FIIs. If you look at FIIs, most of them are non-dedicated active funds. Sovereign wealth funds hold 16%. Sovereign wealth funds are usually the government of Singapore, Abu Dhabi Wealth Fund. These guys usually don't remove their money out very quickly. Only the non-dedicated active funds, which are usually your hedge funds, they remove the money out quite aggressively, right? So as you can see, almost 65% of the money usually goes out and comes in a lot, whereas sovereign wealth funds usually double down when the market has fallen. If you look at the last few months, um, world small cap world fund has invested insane in India. If you look at the government of Singapore, they have taken a good position in India, so they have keep doubling down whenever the market falls down. And India's weight in the MSCI emerging market has only gone up. So over time, if India is going to become number 3 economy in the world with emerging nations, just imagine what will happen to Sensex, imagine what will happen to Nifty, right? It's a matter of time. It is not like this is not going to happen. It is a matter of time. Yes, I don't think we will beat China anytime soon. China is sitting at a supremely ultra human level. I don't think we can beat China because China, we are still looking at India and how India can become better. China is already selling to the world. We are not selling that much to the world compared to China, right? So I don't think we will beat China anytime soon. But all our hope is to bridge the gap between India and China, and that is happening. Slowly, it is happening. It is not happening very fast, but slowly it is happening because China has a problem of scale. Okay, it's already such a big nation, so it's having a problem of scale. This we already know, the last 1 year market cap indices, how they perform, so we don't need to look at this, right? Now this is interesting. Let me show you something. Where is this? This is a beautiful slide. Okay, look at this. This is the percentage contribution to the total market cap of India. Obviously we all know large caps are the best guys in the market, but if you look at it from 2013 to 2025, large caps usually had 77% of the total market capitalization. That means most of the wealth was always in large caps. The small cap and mid cap was not moving much. But if you look at it today, the large caps only hold 60% of the total market capitalization. That means the remaining mid cap and small cap wealth has been created in the last 10 years over here. And you see the mid cap companies have gone from 12 to 18 and 10 to 19. So if you look at it from the last 10 years, yes, large cap companies have grown, but mid and small caps have outgrown large cap, right? So mid and small cap, I believe, will continue to outgrow large cap over a period of 5 to 10 years, because mainly India is now okay to invest in new companies. They don't care about legacy companies anymore. And mid cap and small cap companies are now selling globally. They've mastered the art of selling outside. If you look at so many IT companies, small cap, mid cap, like Persistent, Coforge, they're all selling outside. They're making good money. KPIT, they're all selling outside, right? Whereas your TCS and Infosys are growing at a very slow rate. Very weirdly, they should be growing at a much faster rate, but they are growing at a much slower rate. Yeah, so that is basically how it goes. So this is a very interesting stat because the mid cap and small cap companies are doing supremely better than large cap, and this will continue to happen over the next 5 to 10 years. So if you are planning to build good amount of wealth, find good mid and small cap companies. Definitely keep large cap portfolio because you want that shock absorber. Large cap is just a shock absorber, but have a slightly higher allocation in mid and small if you are a young investor and you have time on your hands, right? So these things will start doing really well, and I feel over the next few years this will do really well. Now coming to, I think this would be a very good slide as well. I think almost the last slide. Gold. How many of you all have seen what has happened to the gold price in the last few years? Have you guys seen it? Have you guys looked at gold price in the last few years? Has it been insane? Yes or no? Right, it has just gone ballistic. It has just kept flying, like there is no tomorrow. The price of gold is flying. It is just beautiful, it is wonderful, and it is only going up. right? But there is a reason why gold is going up so much. It is not because of retail buying, it is because countries have started buying gold at a very alarming rate. I think I just saw news 2 days ago that Russia has around 220 to 250 billion dollars of gold, and they were buying gold. Few years ago, China was buying gold from the outside market. Now it all begs to question, why are central banks across the world suddenly buying heavy amount of gold, right? Are we close to some very big incident that none of us are aware of? That all of them are capitalizing themselves? Possible. I don't know. I cannot predict the future, but something is playing out which me and you are not realizing, right? It can also be another thing, which I feel is a little far fetched, but it's possible. If Russia and China are buying gold at a supremely alarming rate, that leads all roads are leading to de dollarization. Because when de dollarization happens, right, and we remove the peg from dollar, entire east of Asia, remove dollar as our peg. We need gold to back our currency reserves, because our currencies will fall at that point, right? We will have a problem. There will be a massive instability around, but then it'll recover. But when that de-dollarization happens, the markets will fall like there is no tomorrow. That will be one of the biggest crashes, because there's huge instability in the market. In fact, US, I think, will implode because of their debt, hyperinflation, so much dollars that nobody wants it. The dollar value will crash. There will be a huge instability in the financial markets, and all the countries that have gold backing will actually have a stronger sovereign wealth, and all the money will start moving to these countries. I feel, I don't know, but everything points to the de-dollarization coming in sometime in the future. And when that happens, your wealth will go down by at least 40%, 30 to 40%. That is the time you go haywire and start buying at all the lowest prices, because that is just balance of power shifting from US to maybe Russia and China. But the markets will recover like there's no tomorrow, right? They will recover, but that will create a beautiful opportunity. I don't think it's happening anytime soon, but I have no other reason to look at why would China and Russia, the two biggest nations, buy insane amount of gold in the last few years. India also, by the way, our gold reserves have gone up to $90 billion, right? We are at 90 billion, Russia's at 220 billion. I don't know how much China's at, but all three of us have bought a lot of gold, and India anyway have a lot of gold. Now, why I'm saying gold is very important, look at this. Whenever the market has crashed in the past, BSC, right, 9% down in 2012, gold has gone up by 32%. And whenever India market goes up a lot, gold always goes down. But this is the first time in history that is happening, that in the last 5 years, both the gold prices and the stock market have gone up. This is the first time in history that's happened. Not first time in history, I would say continuously it has happened, where gold and equity markets have both gone up at the same time. Why? Because central banks are buying gold, not normal people. Central banks are buying gold. So the demand is coming from central banks. And Nifty is also going up. If you do not have gold in your portfolio, I strongly suggest all of you should have gold in your portfolio, because that creates a good multi-asset portfolio for you. I don't know how many of you all know what multi-asset portfolio is, but it creates a good hedge for you. Definitely have, as I keep telling, I'm making actually a video on this, how to create a balanced portfolio. But a balanced portfolio should always have a mix of equity, gold, little bit of cash, and should have bonds. These four things you should always have. And you should also have one real estate property somewhere sitting. That's it. If you really want to be secure and safe, and you don't care about the market falls, and you can actually capitalize very well on the market falls, where you can remove the bonds, sell the bonds, and start buying the equity market. So I would always suggest keep a good amount of fixed income instruments. That is always there. I'll make a separate video on that, but this is how it is. And if you look at the KGR, gold has given a KGR of 11% in the last 15 years. It has actually given more KGR than Nifty, which is compounded annual growth rate. It has compounded more than Nifty in the last 11 years, which is absolutely insane. So looking at gold from a 9%, 8% compounding is pointless. I think gold should have a good amount of equity in your portfolio, and you can never go wrong with gold. But I would not, but I'm very scared to buy gold as of today, because I feel gold is just at a massive highest point right now. I would not buy heavily into gold as of today. I already have gold, which I bought in 2021, 2022. I have not bought a lot of gold this year, right? Because it has gone up too much, too much. It has to come down. Mean reversion, as you know, it has gone up to a higher standard deviation. It will come down. It has to come down. Okay. Let me check. Yes. Now, coming to financial services, do you know this is where the opportunity lies? 2025 to 2035. If you ask me, Shashank, where can you make money in India? it is financial services. 2025 to 35, this is where it's going to make money. Because if you remember in the last few years, there has been significant underperformance by our beautiful players, whether it is your HDFC Bank, whether it's your Bajaj Finance. And I will show you, it is just unbelievable because when I look at Bajaj Finance, and I they had a time correction of 3 years. In the time correction of 3 years, their profit has gone up double, and the price did not move. Their price to book has come down to its lowest possible point, but the price did not move. Now Bajaj Finance is moving, right? So I feel that in 2025 to 2035, not just Bajaj Finance, whether it's gold loan, and you can see Bain Capital, Blackstone, all of them are coming and buying gold loan. You see your NBFCs, you see MFI is doing a recovery. Every single layer of lending will start doing a recovery, and financial services will be one of the best sectors for the next 10 years, is what my opinion is. And if you look at PSUs, private banks, and NBFCs, I believe all will do well. I don't think one or the other will do well. I believe that systematically everyone will do well, because your cost of borrowing will come down and everyone will start making huge amount of profits going forward, right? Loan growth will start going up, and last few years loan growth was lower. So now I feel the loan growth will start going up. Deposit growth will also go up. With more people having more income, the deposit growth will also start flying, right? Healthcare, coming to your healthcare, this is I think the last part of the slides. But if you look at healthcare has always given similar returns as compared to Nifty from 2004 to 2025. Over a period of 20 years, healthcare has always been the best defensible proxy to the Nifty 50 and the Nifty 500 index, right? Even if you look at all the hospital companies today, pharma companies today, they had so much relative strength compared to all the other companies in India, and they did not fall much. In fact, I know some companies that did an all-time high breakout. But sadly today, 80% of the hospital companies are sitting at an overvalued EV EBITDA right now, right? EV to EBITDA, they're sitting at slightly overvalued positions. But there are some companies, some hospitals that are sitting at a very beautiful position right now, right? Understood? By the way, are you guys enjoying this? Did you guys enjoy this till now? Let me quickly go to TradingView and show you that indicator that I usually use for mean reversion strategies. But this, I think there are a few more slides. I don't want to get into it, but because this was the whole idea, because then this goes into sectors like IT sector, healthcare sector, and all of that. Let me know if you guys want this report. I will try to just put a Google Drive link where you can download it. But this is just a beautiful, that's it. See, as you can see, this is just a beautiful report, and there is so much information on this report. It is just unbelievable, right? So I'll just show you. So I use this indicator, which is basically a standard deviation type indicator, right? The yellow line is the mean, one standard deviation, two standard deviation, same below one standard deviation, two standard deviation. Whenever it goes to this zone, there is always a chance of a pullback, and whenever it goes above this zone over here, there is always a chance of coming back to the mean. And you can see that happens usually almost every single point of time. Whenever it's overvalued, it does come down towards the one standard deviation. Most of the time it's above one standard deviation, but always it'll come back to the mean, it'll go below the mean. And this holds true even with gold. Now if you look at gold, we have to come down, my friend. We have to come down. So if you look at gold, it definitely has to do a nice beautiful downward journey. If you even remove this and just look at the moving averages, gold is significantly higher above the mean. Has to come down. There is no other way. So that's why I said gold money will slowly start moving away from gold and start moving into other sources. And our small cap index, as you can see, huge recovery. This is a buying zone. Very rarely it goes to this point, but that becomes an opportunity. Mid cap index very rarely starts buying. Again with the 500 index starts buying, and all my other companies that I hold are all in that similar zones, right? Whenever I see something that is at this point, I start buying it at that point without even thinking. I mean, assuming the companies are good, you can't go by stupid companies, but that is why I say these are good companies. Yeah, so this is basically what it is. First of all, oh wait, I forgot to show you one more thing. Yeah, so by the way, for all the people who are here who are a part of the community, I think you already know what I'm talking about. But for all the people who are not a part of the community, if you want to know where I keep doing regular updates, I keep doing regular updates over here. I keep sharing other reports, different reports in the community, and I keep giving you updates of what I do with my portfolio. So if you want to just learn more and understand a little bit more about the markets, you can definitely be a part of the community. I think I put the comment over there. Now I want, last part, I want a very nice honest feedback from you guys. Number one, did you guys like this episode? This is not something that very, I mean, a lot of people do in the market. I don't know if anyone does stock market report breakdowns like this. But I want to understand from your perspective, did you like this was live? Yes, and I think these episodes should be done live always. I don't think doing this as a pre-recorded episode would be good. So I just want to ask, do you like this format? Yes, yes or no. I'll just put a quick live poll here. Because if you like this format, then I understand internally that I need to look for more reports, good reports, maybe even a sector report. Like, for example, we can look at the EMS sector as a whole. That report also I recently read. Beautiful, right? We talk about Keynes, Amber, PGL, Dixon, why they're doing so well. There was a massive 30-page report on the entire industry. It was just wonderful. But this report, as I said, it is one of the best reports that I've seen. So if you guys like this, then please let me know in that poll. So I know that, okay, Shashank, next time I can start making this as well. And I hope you guys liked it also, because you guys have spent almost 47 minutes with me and it's almost evening for you guys. For me, it's 8 a.m. in the morning. I'm in US, but I will be coming back next month back to India, right? So awesome, guys. I think I really love this. Can I quickly take one or two questions from the audience before we close? Let me just quickly. Anyone has any question on what we learned today or what we looked at today? Because it was a beautiful amount of information that we saw. And I will share this report in the comment section after this. I will pin it. It's just a Google Drive link. You can just go there and download it. But if you have any questions, let me know. ब्रो अभी जो मार्केट में बाउंस है क्या वो टेम्परेरी है डजेंट मैटर ना दिलीप वो इट विल नॉट गो डाउन टू 21,000 20,000 आई डोंट थिंक वी विल गो डाउन टू 20 21,000 definitely we will only go up from here yes it will not as I said it won't go up constantly ऊपर नीचे करके but ऊपर ही जाएगा at the end of the day so I don't think it is a it is definitely gone up a lot can you say one AI tool oh I have been working on can I show you something I'll just show you a sneak peek what I've been doing in my free time. Should I show you? It's something very weird. Let me show you. I have been. I don't know how many people have heard of this company called Manus AI. Okay, let me show you this. So I've been working on this Manus AI. It's basically like a AI agent kind of a tool, which basically I'm building different models for myself. Okay. So for example, I have built. Let me see where is that model. I have built a app. Okay, this is again only for me, internal use only, not for anybody else. But let me just show you something. I don't know if I can. So I'm trying to build different apps on Manus. Like for example, yesterday I built an app of management integrity scoring tool. So what I do is I'll show you. I open this up. I'm just giving you an example, right? Let me just wake this guy up. Let me see if it works. Let me see if this works. And by the way, I can deploy this completely on my own servers also, so I don't need. So basically what I do, this is I put all the conference call highlights of the past few years into this tool. Okay. See this. This is called the Management Integrity Analyzer. By the way, I've not built this tool, entirely done by AI. So what I do is I choose a company name, like for example, let's say Loris. I upload all the PDF transcripts. I just go to Screener and download all the transcripts from the last 4 5 years, right? And then I upload it and then I tell to do analysis on this. So I say analyze management integrity. Now what this does, it goes through all the past PDFs and then looks at the guidance that has given by them. It looks at what projections it gave, sales projections, capex projections, margin projections, and have they actually been good when it comes to delivering on those promises. Because we look at this transcript, I'm looking at last 3 years transcript and saying, tell me what they've been good at. So they've been good at sales projections. Whenever they've done sales projections, that's worked. Strategic execution 86%, right? The other, I think they don't have enough data here. For example, look at this. They had said that we will deliver this one, partially achieved. Okay, very good. Margin projections unverified. Okay, but we look at this, they have addressed all of these things. So this I'm still working on this, it's not done. So I'm creating a tool with respect to this through Manus. I've also created another one. Let me show you this. There's another tool that I have created. This is a financial model ranking system. So basically what I do, I go to Screener. I basically go to Screener and pick up some companies random, like whatever my watch list is. Let's say I include my core watch list. I put all the companies here And automatically, once I put the companies here in this core watch list, I have my rank weights. So I want to give higher weightage to ROE. Okay, maybe no weightage to debt to equity because I want some banking companies. Little bit weightage to ROC, profit growth, free cash flow. Let me make it zero. I don't want any weightage to dividend yield. Okay, and I want this investment philosophy to be more like Warren Buffett and little bit of Peter Lynch. So tell me, what are the top 10 companies? So according to this ranking and investment philosophy, these are the top 10 companies that come with my own core watch list, right? Obviously, it's not like I will go invest in this, right? Why is this in the top? Because of these, and it also gives me a reason why it is good with Warren Buffett's philosophy. If I look at the visualizations, it gives me the perfect mix, as it says that Nestle is one of the best ROE versus ROC companies that is in the market right now. Buffett score versus Lynch score is also here. Obviously, not everything is investable, but it reduces my learning time by almost 80% because now I don't have to think twice. All I have to do is I have to basically go to screener, something like this. I'll just put TCS, for example. Okay. I'll just go to IT software, right? I have IT software 258 results. I just have to export this, upload it there, and it'll automatically just give me the top 10 companies that is good, right? So if you look at the investment philosophy, what has it taken for Warren Buffett? Consistent ROE, low debt, high margin, earning growth, economic moat, and it'll give me the top 10 ranks here. So I'm creating multiple different things with AI right now. And I host all of this in my own servers. So, and nobody can use it, only I can use it. So I'm still building it. It's not completely done. I also want to have a research report analysis tool, but because I have daily limits, I cannot do it very openly and freely. But yes, a lot of interesting things are happening in the world of AI. And if you're not learning, I think you are not growing. So I am not a coder. I have zero knowledge in coding, but I have very good knowledge in finance. And when I do all of this, I make a lot of it saves a lot of time for me. That is what I'm saying. Yeah. Awesome. Guys, so I think that is it for today's episode. I think we had a wonderful episode. I personally loved it, and I love sitting with you guys and teaching you about this beautiful report. I will share this report in the comment section below for all of you guys just to read. And for all the people who want to join the community, you can do that as well. Again, let me know your feedback in the comment section below. And if you find interesting reports, please put in the comment section below what I need to do. For example, there's a Motilal Capital Market report. There are some other reports you might have seen that I've not seen yet. I will find that report and I will come and do a quick live session. Maybe we can do this 2 times a month. I don't know, but I like it. I personally like it. So if you guys like it, I will come here and do it again. Okay. Awesome. This is me, Shashank Udupa, signing off, guys. Take care. See you guys. Bye bye.